What I was struck by was the recent calls we've had from every investment bank. I feel like we're having short-term capitulation. You have Bank of America upgrading Brent to 64, Citi to 65, Morgan Stanley short-term to 70. Is that a counterintuitive sign for the market, Phil?
Yeah, look, as I've said in the past, I follow the BP Royalty Trust, and that's up 30%, the share prices. And what it's calling for, the way I interpret it, is a price of Brent of around 80 by the end of 2019. And the reason is the global economy recovery. If you go back and you follow what's happened over the last 3 or 4 weeks, everybody suddenly turned much more bullish on global economic growth, not just in the United States. China's growth has picked up, and that is going to push up petroleum consumption. And that'll hold prices up for a while. Now, I don't buy this idea that people are going to slow on shale to please investors. There's a story going around that you ought to hold back to make returns for investors, and nobody told Amazon to focus on returns when they were growing. Nobody told Facebook to slow down growth to please investors. And we're going to see with these prices a big jump in shale, but that's about 20 months down the road. If you look at the commitments of traders, of the swap dealers, the people who write the hedges to these people, that's just gone off the map. And so there's a lot of oil coming. But given the growth, as Javier says, it doesn't matter. Right now, we're in a boom cycle, and the oil exporting countries are going to do what they've always done, which is go slow on increasing production to keep the money.